By the way, Trump also said we'll be doing something very substantial on tariffs with the European Union. So we are seeing sharp reactions in the currency markets to a lot of these headlines, peso, Canadian dollar, as well as the euro taking a hit on the back. But what's your initial take here? We sort of knew this was going to happen. We didn't know it was going to happen in quite this way.
We didn't know it was going to.
Here we are.
In this video, the Fast Money crew discusses President Trump's recent tariffs announcements, the impact of the currency markets, including the peso, Canadian dollar, and euro, revealing a strong U.S. dollar and its potential implications for multinational companies in the tech sector, which are particularly vulnerable to currency shifts. The conversation also addresses potential ripple effects on industries like pharmaceuticals and tech, coupled with ongoing worries about inflation's impact on market stability, particularly following a significant PCE report indicating that inflation remains a pressing issue for the Federal Reserve.
Markets, because going into this, you can make an argument that the U.S. dollar was already strong and that there was a lot of pressure, actually potentially on multinationals in this country because of the stronger dollar. We started to hear about that in earnings season. When I hear that, at least at this stage of a cycle, it doesn't really bother me as an investor for a lot of these companies. But for the European Union, which had a 25 basis point cut this week, ECB, if anything, was rumored to maybe they could go more, they will go more. I think we're breaking parity here, and I think it will be, just to be clear, I think that will be a mitigating factor on inflation. I think a stronger dollar certainly will have more buying power and be helpful. But we don't really know what the impact of all this, and it's just interesting to see how quickly tariffs have come back into the market, which closed on the lows today. But think about where we were a week ago.
Yeah, so, he said that he doesn't expect the markets to be affected and that it's not going to affect inflation. I'll just make this point. We just got this GDP number at 2.3%. This is after two consecutive 3% GDP prints, quarterly. And so the economy was kind of limping into the end of the year. I think expectations were higher than that for Q4. So one of the things we can be fairly certain on, if these sorts of tariffs stay on some of these key industries, it is going to weaken economic demand here. It just will. And so at the end of the day, the president uses the stock market as a report card, but if the economy starts to weaken, the S&P is going to start to anticipate that.
I mean, the dollar obviously is such an important thing. The sector, of course, of the area of the market that has the biggest exposure is tech. I mean, bar none, right? So obviously the big consumer staples, the big energy names, but technology is the highest sort of exposure to a weak or strong dollar. And it's no nonsense when the S&P is doing one thing, but the tech now down on the year. You've got semis struggling. And I think a lot of it has to do with not only the great appreciation that preceded this start to the year, but the dollar.
Right.
Yeah, and I think a lot of this, too, people were wondering, are the tariffs just going to be negotiation tactics, or are these actually going to come on? And clearly we're seeing these are coming on. And this is why the bond markets have been pricing in inflation. I mean, whether it's tariffs, whether it's tax cuts, I mean, a lot of these are inflationary policies, and that is why markets are concerned about where inflation's going. So they're optimistic about deregulation. They are worried about inflation. Markets are kind of up and down as they're trying to figure out where that's going to go. But I would expect that's going to continue to affect the markets as this news continues to come out.
I mean, we've been thinking about oil and gas and commodities and so on in terms of the impact of tariffs. But when you think about pharmaceuticals, you think about the inputs into drugs that are manufactured here in the United States, but the inputs come from abroad. That's where you start thinking maybe we have not yet really fully digested the impact of tariffs and the ripple effects that it can have across several different industries.
Well, and that's it. And we hadn't really heard a whole lot about the impact for healthcare, but certainly for pharma specifically. And so that's part of where the market's uncertainty around really what's coming next, what kind of teeth will there be attached to this. The other side of what we were hearing before we heard about starting Saturday with Canada and Mexico is that, OK, there'll be some offsets. There's going to be a lot of trading going on between the lines, and that, maybe the headlines will be busier than actually the reality of this. So I get back to markets, which today also had to digest a PCE number, which most people know is a big number for the Fed to follow, which came in significantly higher against all relative than expected. So to the extent that inflation is something that we're still fighting, we had a Fed this week that pretty much kind of said as much. They argued that the change in the language was really just to clean up the statement a little bit. But the reality is inflation is still an issue here. And markets, especially the part of the market Carter's referring to, the tech world, I mean, let's be clear. Mega cap tech should be the most insulated from inflation here. And that is what seems to be struggling.